Hello and welcome to Investing Confidential. There's a lot of risk out there, right? You've got inflation, you've got rates, you've got the Fed, you've got all these data coming out, and now you got the World Economic Forum, all the morons out there just spouting off ridiculous nonsense. But all of these risks don't compare to what's going on in Asia, okay? Specifically, China and Japan. And today I'm going to talk about China and potentially why China will have the most impact on U.S. stocks and U.S. financial assets, and why China could potentially have the most investment upside for you traders or investors who want to get a little funky out there. First, I want to say Gong Hai Fat Choi, which is Happy New Year in Cantonese. So for all you out there who are watching, again, enjoy the year of the rabbit. Okay, so it is the year of the rabbit. A rabbit is a symbol of peace, longevity, prosperity. So we can only hope that this year the rabbit brings peace to the rest of the world. Obviously, we've got a war out there. Again, the Chinese are very hopeful about every time there's a new year. So the year of the rabbit hopefully will bring better things to the world. But unfortunately, what's going on in China is going to have real negative impacts all over the world, in the U.S. especially. And I'm going to tell you, I'm going to show you how we got here, where are we now, the global effect, and what this China opportunity is. So stay tuned for that. First of all, China is a totalitarian country, okay? Totalitarian government. The CCP runs everything. And I'm going to give you something I've talked to about it in a couple of videos before, but this is the most important point from an investor when you're trying to or geopolitically trying to understand China. The Chinese government, the CCP, which runs everything, they only fear one thing. They don't fear the U.S. They don't fear Russia. They don't fear anybody. What they fear is their own people. Okay, the Chinese populace is more risk to the Chinese government and the Chinese government's way of life than anything the US or anyone else could do, including North Korea or anybody else. That is because the population is massive. Okay, it's very volatile and at times could be very violent in terms of social unrest. So this is what they fear. Just remember that as we walk through everything else here. So look, how did we get here? The real estate crisis. Okay, the real estate crisis started way before COVID. It started with a company called Evergrande, one of the largest real estate companies in the world. As I mentioned before, the real estate industry has been the growth of China, has been the engine of growth for China for 25 plus years. This is how they grown the country. Okay, they, development, real estate development, which brought people in, which consumers, I'm not going to go into details on it, but this has been the engine of growth for 25 years. Don't let anyone tell you anything differently. Okay. So once this Evergrande got in a problem, which was, over 100% levered through banks, et cetera, it was contagious. So the whole sector through contagion was affected and the whole sector went down the hill. And buyers, because what they saw was going on, they froze. Okay. And this crushed the economy. Okay. The consumers are very affected on what's going on in real estate because Chinese consumers who have money, even the ones who are middle class, they really believe in real estate. They've made a lot of money over the last 2 or 3 decades. And this is what they love to do outside of speculating in stocks. And when the whole market started to crash, the consumers froze. They stopped buying everything. And then they eventually stopped paying their mortgages. So what that basically created a waterfall. And then you combine that with the idiotic zero COVID policy, which obviously was a massive mistake given all we know about COVID. All of this led to beginnings of social unrest all over the country. Okay, so we saw obviously protests in Beijing, Shanghai, but I'm going to tell you, 70% or 80% of the country had protests. Okay, small villages, and a lot of them were very violent. You're not going to see that on the news or anywhere else, but this is the reality. So Xi has had to give back power. Okay, this is non-consensus. Okay, most people think he's in control. He is in control, but he doesn't have the power he used to be. There was a lot of pressure on him from all sides, and so the first concession he gave was if you were a corrupt politician in the past, you would only get a slap on the wrist. You wouldn't go to jail for the rest of your life. So that was one concession that nobody talked about. That was big. Okay. The zero COVID policy had to be scrapped. It was finally scrapped. This is really bad for Z. Okay. He was pressured to do this. Obviously, he's losing power here. The economy is getting crushed because of a lot of reasons before COVID and COVID. We've had the worst GDP in 20 plus years, maybe the worst GDP ever since of modern China. And we see other things. China's labor, okay, labor costs, they're no longer competitive. Okay, as you can see here. I mean, you can get better labor costs in places like Vietnam and Mexico. So that's a really big blow. China's been obviously a exporter of deflation, low cost producer, et cetera, et cetera. And then what Z did, he invested in this ridiculous strategy of Belt and Road. Okay, it was $1 trillion in Belt and Road. No, Belt and Road has been stopped. It's been a disaster. It's been a disaster in Pakistan. Okay, it's been a disaster in Sri Lanka. It's a disaster, or has been a disaster in Ecuador. Billions of dollars have been squandered in projects to nowhere all over the world. These are non-economical projects. The reason the Chinese invested is in this was the strategy. This was Z's strategy, or even prior to him. You lend these developing stupid countries money. Then you send all your workers over there, okay? Because the Chinese don't want the locals. They want to so Chinese sends thousands of workers overseas in Africa and all these places. They make all this money, okay, lent by the Chinese banks. But now the Chinese banks are holding the bag because they thought they were going to get paid back. Stupidly, the EM countries, emerging market countries, are not going to pay back this stuff. So most of this Belt and Road initiative is in default. Okay, they're not going to tell you that, but it's in default. So this Z is wounded. He's a wounded politician. I don't think he's going to recover. But for now, it's not. You're not going to get rid of him, okay? But he's wounded, okay? And this is non-consensus. The talking heads think he has full power. He does not. He's wounded, okay? This is the real problem in China. But China has continued real problems, okay? Pollution is the biggest problem internally in China, outside of the economic issues, okay? They're building half the coal plants around the world. They have no choice, okay? They have no choice. This has led to massive air pollution, okay? You go into Beijing still today at the wrong time. You can't even breathe. That's why Chinese have been wearing masks, not because of COVID, but because of air pollution for 10 years, okay? 80% of the water in China is not drinkable. Okay, not drinkable. They got huge issues in China. Again, this is, all of these is leading to consumer confidence below trend. They're not buying anything. It's obviously a big blow to the global luxury goods industry. That industry has been pummeled. And I think, my personal opinion, I spoke about this in a prior video, China's done as an economic power. Okay, they're no longer going to surpass everyone says, oh, they're going to surpass the US. This reminds me of Japan in the 1980s when everyone said, oh, Japan's going to take over the world. No, Japan didn't take over the world. Their market crashed. Everything, real estate crashed, and Japan is still trying to recover from the late 1980s. Still trying to recover today. But we'll address Japan in the next video. So, and then the biggest problem of all, okay, came out a couple of weeks ago, but most people who have been studying China knew about this. China's population has fallen for the first time in 60 years. Okay, China has a massive problem, as does Europe, as does Japan. Their populations are old, right? The one child policy really sunk China. Okay, and again, their leaders, the Chinese biggest problem is their leaders. Their leaders did this because they couldn't feed their people, and so this one China policy has been scrapped, but it's too late. China will never recover from this. The numbers tell you it is impossible for China to ever recover from this one-child policy and a decline in population. So what does this all mean? Okay, it means one thing. China exported deflation for 30 years, okay, and the West benefited. Now China is going to export inflation. Okay, we saw that with the wages. Okay, that's not going to change. Now we talk about the positive stuff. This could be a very big interesting opportunity for Chinese companies. Again, these are all trades. Okay, the long term, China is terrible. The demographics, everything's bad. But in the short term, okay, there could be very interesting market impacts. Okay. And obviously, the first is that China's coming out of COVID. It's going to be coming out of COVID the next couple of months. And that's an opportunity. I hate to say it, but that's an opportunity, because one of the things that's happened is that Chinese stocks have been pummeled over the last 6, 7 months, the last 12 months, let's say, and they have tested the COVID lows successfully. Okay, as you can see here, they've tested the COVID lows. As I've been mentioning in many of these videos, I don't think any asset class can go higher to new highs until they test COVID lows. That includes the S&P. Okay, that's 30% from now on the S&P. But I really believe that. But China has tested the COVID lows, is now recovering. Okay, China obviously recovering is going to affect oil prices positively, energy stocks globally positively. China is a leader in clean energy because of what I mentioned about pollution. They have to continue to invest millions of dollars in clean energy. That's going to be positive for clean energy companies, lowering the price of certain clean energy items, but also because they have no choice. Okay, more positive indicators here. Iron ore is recovering. That's a direct, proxy for China. Copper, Dr. Copper, as we call it, is recovering off the lows. Okay, breaking the downward trend. China real estate is beginning to recover. And this is based on incentives be giving to home buyers. At first, the Chinese tried to bail out the banks. That didn't work. They tried to bail out the mortgage companies. Didn't work. Now they're finally giving incentives to home buyers. The home buyers, which are the consumers, are getting a little more up. And China real estate is recovering. How do you play it? FXI outperforming the S&P. That's going to continue. But the best way is buy Chinese tech. Look at the charts. Take a look at Alibaba. Take a look at JD. There's a bunch of them out there, but I think that's the way to continue to play China. Now, look, as I mentioned, it's all a trade. Okay, it's all a trade. But China has technically, tested the COVID lows. So we will continue to see interesting strength coming out of China. In the short term, you're going to see really bad COVID news that may knock down the stocks. That's going to give you an opportunity to buy. Okay, unlike the US, which every opportunity, every rally is a time to sell. You could have an opposite thing in China where these downdrafts in China because of COVID news, whatever, could be an opportunity to buy. So that's what I think is happening in China, and what is the opportunities. So for all you investors out there, be careful out there.